What is up? This is the Working Investor. In this video, we are going to talk about nest yield in the context of the recent market decline and how they held up relative to the Qs and why I'm very disappointed with their performance. And I'll also talk about two surprising other income ETFs that actually have outperformed these funds, and they have shown some relative strength to the Qs. And the response from the fund manager when I emailed the fund manager what the heck is going on with their funds. Anyways, like always, nothing here is financial, tax, legal advice, or cracked egg advice. This is purely for fun and entertainment purposes only. Let's get into the video. Please see all my disclaimers. I feel like I'm contradicting myself because I've made a couple of videos boasting how much I like these funds of EGGS and EGGY in particular, even making a follow-up video on it. And what I was referring to was when the market took a tank in April, you could see clearly that relative to the Nasdaq, EGGS and EGGY showed some relative strength. In other words, they did not fall as hard. And there were many points during the year where you could see EGGS and EGGY not only showed relative strength compared to the Nasdaq, but when the market went up, they actually had greater upside convexity relative to the Nasdaq. And one of the secret sauce is, for example, in their EGGS fund, they describe on their website that it has all three core objectives: consistent monthly income. Who doesn't like to have consistent monthly income? Long-term growth. Who does not like long-term growth? And active downside protection. These things made me very impressed. They are more concentrated than the Nasdaq. So they talk about a concentrated portfolio of 10 to 25 of nest yield's highest conviction holdings. And most importantly, from all three funds, EGGS in particular, I look at S like safety. That's how I look at it, my mnemonic. They say that EGGS help preserve capital and manage volatility inherent to a concentrated strategy. EGGS actively employs tactical hedges, and we're going to talk about this very soon, across individual positions, the S&P 500 and the Nasdaq, creating a smoother return profile and a more resilient path to total return over time. As you saw this play out in the Liberation Day, you could see definitely compared to the Nasdaq, you could see relative strength compared to the Nasdaq. So my question is, what on earth is going on now where everything seemed to have flipped, where the Nasdaq is outperforming EGGS and EGGY? And if you zero in on the 1 month chart, it looks even uglier, where you could see right here, the 11th of November, a divergence in a path where you can see the Nasdaq is showing relative strength compared to EGGS and EGGY. And this is the ugliest part of the chart. If you go all the way, you could see that the Nasdaq, well, I got to toggle this all the way, is down 3.59% total return compared to EGGS down 8.18%, more than 2x the drawdown relative to the Nasdaq, and EGGY even worse, 9.8% at the time of making this video. Now, this is very ugly in my opinion because, of course, the market is down. Of course, this is more of a concentrated bet on individual companies. But, to have the protective puts on EGGS and have the tactical defensive stuff in there, which we're going to talk about in a second, with all that, I wouldn't expect a greater than 2x drawdown, to the downside, and only 1.5x to the upside. That doesn't seem like a fair risk-to-reward profile. Let's go ahead and pop the hood and see what the holdings are of EGGS, which I downloaded this morning. And all I did was just highlight a couple holdings that I want to bring to your attention. So you can see here they have a whole bunch of very high-tech AI type of stuff. They have a lot of the names you guys are familiar with. But one thing I want to highlight is they have MSTR. And I don't know, I guess they have a conviction in Bitcoin because MSTR is correlated to Bitcoin. I did not realize investing in this fund that I'm going to invest a little bit in Bitcoin. I do have a Bitcoin position, but I am a little bit overweight and I'm trying to keep my weight keep my diet of how much Bitcoin exposure I have because of the volatility. And I'm trying to find the optimal position for myself based on research that I've read up. I've read up somewhere, and this is just what I've been reading, and I'm trying to aim to this. I read somewhere that the optimal amount is about 5% to get that best risk to reward. And that's just some data that I've read up and researched and heard from other investors talk about. So I had a 14% position in Bitcoin exposure, and I kind of knocked it down to about 10%. So I'm not at optimal level yet, but I'm trying to be careful and mindful of what I hold that has Bitcoin within it or Bitcoin related stuff. So MSTR has, I guess because Bitcoin is down, MSTR is probably really down. They do have Walmart. That's their defensive tactical tilt. That's not tech. And you can see 2 lines lower, they have COST, which is Costco. So those are interesting tilts in the portfolio. And in the bottom column, you can see all their option overlays. Now, whatever they do, they really seem to be a decline. Now, as I promised you in the beginning of the video, let me show you 2 other holdings that I have in my portfolio that I'm actually quite impressed of how resilient they were overall, especially in the past month. One of being KQQQ from Curve, which also, as I pointed out in previous videos, have protective puts on MAGs. They also have this focus on convexity on the upside with large tech titans, and they happen to have sometimes, and they saw recently I saw they had some protective puts on the downside. And the other one that I'm very impressed with is QDVO from Amplified, which is growth and income ETF. I did a whole video covering this. They also have a lot of tech and everything in there. 57 holdings and only have an expense ratio of 0.55. So this is probably the cheapest expense ratio of the bunch. Let's go ahead and take a look at the charts and see which ones are actually giving you your money's worth based on expense ratio. So let me show you 2 charts even, just in case you think I'm making things up. So we're going to look at Seeking Alpha, and for some reason I'm having a hard time toggle this all the way to the right, but it's about the same. So you can see QDVO, I want you to focus on the Qs and see who had done better than the Qs, which tech ETF did better than the Qs. And you can see clearly that KQQQ did better than the Qs, only went down 2.51% month over month. It's been a choppy month to the downside. And you can see QDVO did the best at only 1.5% drawdown, which is incredible. Compare that to EGGS and EGGY. These things are multiples of the drawdown compared to QDVO and KQQQ, and these are all income funds. And QDVO has the lowest expense ratio of 0.55, 55 basis points. Let me show you on another website. Very similar numbers you can see on stock analysis, total return, month over month. Again, you could see the bottom of the pack. They're saying that EGGS is, the way they do the math is maybe a little different, but EGGS is down, 10%, 10.38%. EGGY 11.93%. The Qs are down, 3.51%. KQQ, you can't really see it, but it's down just a little less than the Qs. And you can see QDVO on the top only down, 1.5%. The bottom line is that I emailed the fund manager and I'm like, what the heck is going on over here? Why are your funds lagging so badly, especially with a drawdown, especially with EGGS that has that value tilt? And actually, that Walmart actually held up pretty well in this down market after the NVIDIA earnings. So the fund manager said he'll get back to me sometime today. I haven't heard back. It's been many, many hours. I guess they have to revisit what's going on. The question that I have as an investor is, do I want to keep my position here? Yes, I'm down. And yes, part of me is like, just stick it around. Maybe you'll bounce back and everything. But part of me is like, if the fund is not doing fundamentally what I want it to do, of course, market goes down. But I was looking for some relative strength, just like we saw back in April. So I'm kind of contemplating if I should dump my EGGS or EGGY and put my money into better ventures and cut my losses. Let me know what you guys think. I'm honestly just on the fence over here. Yeah, hope you guys are doing well. We'll get through this, hopefully, probably. And this is Wicked Investor over and out. All the best. Be well.